Alrighty, what's going on, guys? Edward here, back with another video. Thank you so much for being here again. It's been a little while since I posted my last one. We've been having a lot of issues here in my country, Venezuela, with issues with the electricity, internet connection. So it's bad. But anyways, that's another topic. So today I kind of want to bring put a lot of things together and just give you a straightforward, ICT entry model or trading model, whatever you want to call it. Because I get these questions all the time. All the time, I'm getting these questions like, "What is the best time frame to trade ICT? What is the best currency pair?" I'm hoping I can answer all of the questions right now, based on an entry model, okay? Because ICT concepts has a lot of entry models, okay? And the entry model that I'm going to show you right now, it's probably the easiest one, or it's going to help you identify probably the best models for you, and you can just keep them in your head. You can uh, take a screenshot, for example, and then just look for those setups only, okay? Because these are literally patterns, okay? This is like, for example, when we used to trade, for example, I used to trade head and shoulder patterns, it's the same, okay? Right now, ICT is just learning a particular pattern. So there's something I want to show you right now, just straightforward. Jumping in here on S&P 500, we see the price is actually ranging. What are we going to do? I'm going to explain you when is the best time, okay? But the best time not for every single pair. No, I'm going to show you the best time based on what I trade and when I trade, okay? What is the best time for me, okay? If this works for you, good. If this time works for you, good. If my best time is not your best time, you're going to have to figure out what is your best time, okay? Based on what? Based on being comfortable, right? I don't want to be waking up at 2 or 3 in the morning, right, to trade GU, right? So it's something comfortable for you. So I trade New York session, and ideally I trade the morning session. You could choose the entire New York session if you want it, right? But if you don't have enough time, because let's say probably you have a job and you have the morning off and you start working in the afternoon. So okay, you have the morning. You can trade in the morning, right? Probably just a couple of hours. You really don't need to be 8 hours sitting in front of your computer looking for a setup. And as a matter of fact, I don't recommend that because it's just too much, way too much. We only need a couple, probably 2 to 3 hours. And if we're scalping, of course, if you're a swing trader, probably, of course, you're gonna have to, you know, it's a different thing. But if you're a scalper, within 3 hours, if you're trading in on a 5 minute time frame, 1 minute time frame, in 3 hours you can find a lot of setups, okay? And not necessarily you have to trade them all. So, anyways, one of the things right here for this entry model is time. Most important thing in here, timing, okay? Time is very important. When? I'm going to be giving you these examples on indices, Nasdaq, S&P 500. And again, these are US based indices. So I'm not going to be trading this in the Asian session. I'm not going to be trading this in London session. I don't trade London session. Although you can find some setups during London session on S&P 500, Nasdaq as well. But ideally, you want to trade them during the New York. Why? Because they are US-based indices. They normally have more volatility and more movement during New York. So it makes sense, right? So again, common sense. We're using common sense right here. So if you don't want to be stuck in a consolidation, well, it's probably better to trade during New York. Okay, if you go London or Asian session, you're most likely going to be stuck in a consolidation, depending on what's happening, of course, in a day. Every day is different lately. So, anyways, time. Okay, now once you have that figured out, okay, you jump into the next one. What's the next thing we want to see? Liquidity. Okay, this is straightforward. Right now, for example, here on S&P 500, what do we see? Price is ranging. I don't even have, let's say, a good bias in overall because price is freaking moving sideways. Okay, no biggie. We're just going to pay attention to see how the market closed yesterday, right? I want to see right now New York session. New York session, the morning session is just opening right now. So I'm going to mark up. Again, look, markets are sideways, are moving sideways for the past week or so, maybe a little bit more than a week, right? So probably I don't have a bias. What am I going to do right here? I'm going to mark up, I'm going to look for liquidity areas. I'm going to mark up the nearest high and the nearest low right here. And I'm going to call this sell side liquidity and buy side liquidity at the top. Okay? Simple as that. Right now, I probably don't know what I'm going to do. New York session is just opening right now, right? I need to spot some sort of liquidity being taken, okay? Liquidity is important. Liquidity is what is the entire, how can I say, is the column of ICT. Is the structure of ICT. The main structure probably is liquidity, right? The whole point, the whole thing right here is liquidity. So if I want to buy, for example, I need to see some sell side liquidity being taken before I buy. So, of course, what do we see recently that happened during Asian session and London session? We were trending up, right? And this trend to the upside, hold on. In this trend to the upside, we see, of course, the price created a lot of lows right here. Probably this is all engineered liquidity, right? We have a bunch of lows. If I want to buy, I need to see for the price to take liquidity and then form some sort of pattern that I can take a buy probably, or probably the price is not going to push up, but the price can actually maybe drop later, right? So I might actually probably wait for price to continue pushing to then take this liquidity and then show displacement to the downside and boom, right? And we go selling. So I need to wait. Whatever right now, I just need to wait, right? So look at in this example right here, what happened. New York session is here, so it keeps pushing up. So for this, I'm gonna show you what happened in here. So what do you see that is currently happening? We are taking that recent low. Should I look for a buy right now, Eduardo? Can I take a buy right now? No. The only reason, or the only way you would take a buy right now is it now that you have the next couple of things. Remember, you have to follow all the things right now. Liquidity. First, are you in time? Yes, I'm in time. I'm still within New York session. Good. Are you spotting liquidity? Are you seeing the market taking an old low or an old high from the day before or so in this, depending on the structure, right? Are you seeing any liquidity being taken? Yes, I do. Okay, good. Now, from there, you need to wait for a change in the state of delivery, okay? AKA breaker, OB. I mean, I will show you right here. The change in the state of delivery would be actually right here. The opening price of this candle, right? These two candles right here, this last move, the opening of that candle, that's going to be the change in the state of delivery, right? Also known as order block, because these two candles, if we have a candle closing above, those two candles are going to become a bullish. It's the first bullish order block, okay? I like to call this just changes the state of delivery. It's basically, a lot of things are happening if we close. Look at what happens right here. Look at this. We have, it was very quick. You see, it went down quick and it pushed up very quick as well. Very quick, very fast. This should be also one of the most important things, right? How fast the price returns back into the range after it takes liquidity. It has to happen like this. Most of the times we're going to have sometimes we're going to have the prices a little slow, and it breaks later. So you see that the force was not strong enough. And to me, that's not going to be an A plus setup. Why not? Because there's not enough pressure. The market is not telling me much. It's not. I want to see an aggressive buy. I want to see an aggressive pressure, buying pressure right here. We're also happening to see market structure shift. Okay, this is a market structure shift right here. What else are we seeing? We do have a breaker. These two candles right here is a breaker. This is where we're starting to see all the PD arrays that we need, right? The change in state of delivery, breaker block, order block, fair value gap. It's all part of this thing. Very important. A fair value gap Oh, I'm sorry, mark it up. A fair value gap is key in ICT. Like you have to see a fair value gap. If you don't see a fair value gap, you have very low probabilities of winning the trade. Okay. It doesn't necessarily mean you're going to lose it, but the probabilities are low, you know? So in combination right here, now we do have a breaker, right? We have that change in the state of delivery, breaker, we have market structure shift, we have a fair value gap on top of the breaker. So a fair value gap on top of the breaker, it's a pattern known as the unicorn, right? So if you want to go long from here, you could be placing already after that candle closes. It validates all of this stuff right now. It validates the change in state of delivery, order block, breaker block, fair value gap, market structure shift. You see how many things are happening with that candle closing right there, right? Automatically we have change in state of delivery, breaker block, order block. We have a fair value gap, right? So if we're going to be looking for an entry, probably right here, the stop loss has to go below the swing low. You can place it probably below the breaker, the low of the week right here of this breaker, this swing move right there, or go safe right here. Target, where's going to be the target? We're going to be targeting the opposite liquidity. If we already swept this low, we're most likely going to go for the opposite liquidity, which is a recent high, right? What is the recent one? Well, probably this one. It's a very important TP. Okay, this could be a partial profits, right? Some partial profits taken right there. And then the last one right there from that high from the day before. Okay, we could target those. We're good. Even though I'm targeting right here, I know I have to take action. As soon as the price reaches this area, probably taking partial profits, moving the stops to break even, and so on, right? Now, you see that I'm actually spotting this on the 15-minute time frame. Okay, what are the best time frames to trade ICT concepts? Look, you are going to make the best time frame for you. If you're a scalper, you're most likely going to use 15-minute, 5-minute, 1 minute. If you're a swing trader, you're going to go higher than that. You're probably going to go daily time frame, 4 hour, 1 hour, right? So there's no best time frame. You are going to make it the best time frame for you based on your preference, what you like. So I am a scalper. I love scalping, although I do sometimes swing trade from time to time, not all the time. I normally don't have much patience, but I like scalping the most. So anyways, my favorite time frames to trade, definitely if you want to pay, like you understand, right? What I'm trying to show you right now. Markets is choppy. I don't need to know what the actual bias is. Like, should I go long today because the daily time frame is telling me to go bullish today? Is that it's not even necessary. All I need to do is just simply wait for some liquidity to be taken and take action after that. Because if the price really wants to continue going down right now after taking this low, we may not even see a change in the state of delivery. The price will probably react to this order block right here and just simply continue dropping, right? So if we do have the change in the state of delivery, then I'm looking for the buy at that moment. I'm not going to be looking for a buy from here. You know what I mean? So we have to be patient. We understand price is taking liquidity. Now what's next? Nothing. Wait. You have to wait until you have the third step, which is some break of a structure now to the upside. And it has to be with a lot of volume, ideally. You have to have a lot of volume right there. So closure. Anyways, let's see what happens after that. Price pulls back. You see we're getting into the fair value gap and also tapping the breaker at the same time. And then here we go. It actually displays very strong to the upside. So on top of these things, there's a lot more things that you can find. A lot more, like there's a lot more PD arrays that you can find to make this trade even better or to have more confidence. What is it? Like, for example, okay, maybe I'm not showing it right here, but probably let's say the midnight open, right? In this particular case, if I open the midnight open right here, midnight open was right here. So, okay, by the time the price swept liquidity, we were below the midnight open. So it means that we should be looking for buys, right? When we are below midnight open. When we are above midnight open, it means that we should be looking for sells, right? That's an idea. This tells me probably a little bit of a bias for the day. That's one thing I can use. What else? SMT, right? SMT is very important. Probably right here, if we take a look at Nasdaq, maybe this is S&P 500. This is how we close on Friday. If we take a look probably on Nasdaq, let's try to bring it on the split screen right here, right quick. So if you take a look at Nasdaq, hold on. There we go. So Nasdaq, you see this low right here is this low. This low right here is this low. So you see Nasdaq is not taking liquidity. It's not taking this low, but S&P did. So what do we have? This is called SMT divergence, okay? Smart money trap, okay? This is normally a very good sign of a reversal, okay? So whenever you have SMT, you notice that you have SMT. This is why I like to combine trading Nasdaq and S&P simultaneously at the same time, because you can, I'm constantly looking for SMTs, especially during New York session. So you see what's happening. You see what I'm doing. You see when am I looking for the entry? What am I looking for during this time? Okay, I want to see liquidity being taken. I want to find a change. I want to see a change in the state of delivery. I want to see a sign. What's this sign? This was the sign that price wanted to go up. That's the sign right here. It's a pattern. What pattern is that? Look, if I open here, this is a freaking head and shoulder pattern. Where's the head and shoulder patterns here? If I can find it. Anyways. Oh my God. Don't remember what it is. That's a shame. Anyways, you understand. It's pretty much, this is the left shoulder, this is the head, this is the right shoulder, right? If we're trading, if we were trading patterns, we'll probably be making the entry probably after the neck, the break of the neck, which is probably somewhere here. And then placing the stop loss below the right shoulder, and then we target probably opposite highs, recent highs. So it's basically the same thing. So it's a pattern. Okay. So if you start looking for this only for this, you see, I mean, it is so much easier. It is simple. I know this example probably is the cleanest one. I know there are going to be days where you're going to have probably much worse conditions, right? For example, when there are fundamentals, when there are news, which is, this is why I'm writing here other factors, right? Like, for example, the daily bias. It would make sense probably, let's say you're bullish on your daily time frame, you know you're strongly bullish, so it would probably make more sense to look for buys instead of looking for sales. You see, so you start combining things. You find SMTs, you spot a unicorn, right? Be careful with the news if there are fundamentals involved. Always, all of that stuff, of course, it's gonna make it either better or worse. Okay, the conditions, especially news. I don't like news. I'm not a fundamental trader. Lately, we're having a lot of fundamentals involved. So I hope it makes sense right here with this example. Gonna make another video. We'll just pretty much probably make a series of 2 to 3 videos based off of this, so you guys can understand. Let me know what you think. Let me know if you understand this, if you're confused, if you're struggling with this thing. I want to hear your questions. If you're interested, probably joining my team for life. There's an offer right now. If you go on my website, teamprofitsfx.com, I'm offering an entire bundle, and it's a one-time payment. Just, you want to see the price? Take a look on my website. You'll be surprised. It's a one-time payment, and you're part of the team forever. I commit to teach you if you're willing to learn. Okay. So thanks again, guys, for watching, and I will see you in the next video. Take it easy.